How's it going out there? Hope all you enjoy the new year. It's January 11th. I'm Frank Curzio of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. So, whoa, what a week. Was it the 3rd? I left for the CES last Monday, about 6 days. Come back. Market's down like every single day, especially in NASDAQ, which is mostly high-growth technology companies. And make no mistake, I mean, this downfall is due to one thing, one specific thing, and that is inflation. And this is something we've been pounding the table on for a long time, saying how it's not going to be transitory. But you're looking at this as a whole and seeing how the Fed is late to the party. I mean, just make no mistake, inflation is here, and it's not going away anytime soon. And this is one of the things I was worried about. It's why the Fed did a 180 in November, which the Fed never really does, right? They usually explain months ahead what they're going to do. They don't just go out there and do something crazy. And they did it in November, surprised the markets. Saying it's going to raise rates sooner than expected and stop buying bonds. It's why Goldman, after providing its forecast just 3 weeks ago of 3 rate hikes this year and predicting that the Fed's going to end its bond buying program in December, yesterday came out and said they're predicting now 4 rate hikes and pushing forward its forecast from December to July for the Fed to end its bond buying program. Pushed it forward by 6 months. Goldman made this forecast 3 weeks ago, guys. This isn't like a 6 months ago or even 3 months ago. This is 3 weeks ago. What's changed over 3 weeks? It's also why Jamie Dimon, most connected guy in banking, in terms of politics, global, close ties to the Fed, he said this week he would be surprised if it's only 4 rate hikes this year. And somebody was saying a few weeks ago, 3 rate hikes. I broke down that Goldman report and said, no way. There's no way it's only going to be 3. Unless it's 50 basis point hikes, which usually, they're not going to do. I don't think. They might have to. But it's also why I pushed Money Flow Trader the last 2 weeks of December, which helps you make a lot of money during extreme volatile times, which we're likely to see at least, guys, over the next 12 to 18 months with the Fed in tightening mode. So you're looking at extreme volatility, and you need to realize it's not just the Robinhoods, which was over 80 and is now $15 a share. AMC was over 65. It's now $22. Renewable energy, marijuana stocks have gotten destroyed the second half of the year, and now they're down more than 10% plus in 2022. And we're 11 days in, guys. A little over a week here. But if you look outside of sectors and go into industry, specific industries, holy shit. I mean, biotech is down 10% this year. Software is down 9% this year. Transport's down 8% this year. Apparel companies down 8%. This is just the opening of the year. But you have to come to terms with inflation. Something a lot of people have been shouting from the rooftops for such a long time, for decades. We're going to have it, and we haven't had it for decades. But this time it was different. I mean, you handed money directly to people. You didn't hand them to the banks to backstop the financial system, like credit card. You handed it to people. You give them check after check after check after check. The reason why holiday sales were okay, digital killed it, but they were okay year over year because everyone was spending money during the year because they had so much money. It was handed to them. Loans you didn't have to give back for businesses. Even Harvard filled out for a freaking loan, for the PPP loan. What a surprise. But when it comes to inflation, it's by far the biggest risk to the market. It's not defaults, it's not bankruptcies, it's not debt. We continue to print our way and push it down further and further and further. We can continue to do it. We've done that. And look what happened. Look at the bull market for what? Over 10 years, 12 years? Outside of a few hiccups? With COVID, maybe a 15% decline in 2018, I believe, late in 2018. But other than that, holy cow, record highs. But when you have inflation, none of those things work. The only way to stop it is to basically force a recession. You have to take money out of the system. Want specifics? The child tax credit. It's got to end this year. Very, very soon. Unemployment benefits going to be scaled back, not offered forever, where you're making more money on unemployment than you would working. You otherwise a labor shortage in almost every single freaking industry. There you go. It's why the Fed will stop buying bonds much sooner than expected, which helps keep rates low. It's why almost every Wall Street firm, I just mentioned Goldman Sachs and JP Morgan, everyone's going to follow. They're going to continue to raise and increase their Fed hike outlook over the next few weeks. They see it coming. Inflation is here. It's not going away soon. That's why interest rates are starting to surge, with the 10-year touching 1.8%. That's a major move. You can compare it historically and say it's still very low. You're right. But we're looking at 1.3 not long ago, a few months ago, to 1.8. That's a major move of the 10-year. Again, still low by historical standards, but you see the shift. There's a fundamental shift going on. Inflation is here, and the Fed is behind the curve. And they're like, holy shit. You have to realize that. That doesn't mean everything's going to crash. We should go 100% into cash. Don't do anything. I mean, look at it. Oil and gas is up 7% this year already. Regional banks, insurance stocks, all up over 5% this year. There's sectors that are working, stocks that are working. But it does mean companies with strong balance sheets and dividends, they're going to outperform growth names who are not expected to be profitable for many years. That worked when you have free money given to everybody's funding every project. I mean, you got to see some of the crypto projects I see. They raised $3 million, $7 million, $15 million. They don't have a business model, and they're saying this is what we're going to do. They don't even have something that's in existence. Hey, we're generating $1 million in revenue right now, and this works. And this, no, they're like, listen, here's an idea. This is what we're going to do. And it's these kids that never ran a business before in their lives. And you're like, holy shit, these guys just got $10 million in funding? Are you kidding me? I'm not saying those days are over, but they're going to be pretty close to being over. You're going to have to... The good ideas will always get funded, but the shitty ideas get funded when you have easy monetary policy, which we've had for a long time, especially the past few years. You look at small caps, many of those names are going to take a hit, especially ones that don't have strong balance sheets to go along with their huge potential growth. It means gold's finally going to have its day, or should I say year. I mean, provides a nice safe haven, even as rates are going up, since when you account for inflation, real interest rates are still well into the negative. But it also means it's a good time to buy Bitcoin on this sell-off. I mean, it's being viewed as a risky asset, and people are selling it. Well, there's a lot of margin, I know that. You're going to see margin calls, and I get it. But I really don't see it as a risky asset in this environment. Is it volatile? Of course it's going to be volatile. But to me, it's much less risky than owning assets that are sensitive to higher interest rates. You don't have to worry about dilution. Institutions that relate to the party are going to likely start buying Bitcoin at these levels. Even Novogratz said, who has his finger on the pulse, 38, 39,000 is going to be an interesting level because the institutions were late to the party. And why else are they going to buy Bitcoin? Because it's a $2 trillion market. That's one reason. Two is they're mandated to own alternative assets, which here you go, gives you a shot to own alternative assets. It's why you're seeing massive hiring, JP Morgan, Citigroup, Wells Fargo, for crypto jobs. Massive hiring across the board. And the most important thing is their clients are screaming for it. They want crypto exposure. Even Jamie Dimon said that. Our clients want this, and it's a big enough market where there's volatility and there's liquidity, and that's what you need to get big money in there. I think Bitcoin's a very strong buy here, and volatile, but a good asset to own in this type of environment. As the markets fell last week, I was out there doing my boots on the ground research at the CES, a Consumer Electronics Show, which I attend basically every year except for last year. I think we're up to 10 years now. A lot of companies canceled. There was a lot of open space. If you look at my videos, which are on YouTube and TikTok, especially our website, Curzio Research, we publish everything. My team put together a great timeline of all my videos that I did and sampling the products. It was awesome. But you're going to see the floor space, it was kind of uncomfortable because companies canceled late. And even though you had 1,700 companies, including 800 startups, it's probably about 60% less than it was in previous years. In previous years, I mean pre-COVID. But the fact that the new variant is, again, it's going around like crazy. Everybody's getting it. A lot of companies canceled within the last week, 10 days. So there's just so much space there. I mean, they opened up a whole West Hall just for autos, but it was a little disappointing because the major auto companies weren't there. There was a few of them. You know, BMW, Hyundai, you had Chrysler there, a few of them. But Ford, GM, Mercedes, all these guys, I mean, holy cow, this is big in Detroit Auto Show. So much so, they created a brand new hall, which you have to take the Hyperloop for Tesla there. Basically, it's a 2-mile drive that's in a big loop, a big tube that, you know, they just drive to from one area to the other in the CES. That's how big the CES is. That's how big the convention center is. I'm just talking about the convention, going from Central Hall to West Hall to South Hall. You're taking, you know, this Hyperloop, which opened, I think, a year ago. It's the first time I took it. But, man, you're looking at the West Hall. They opened that specifically. They used to have it in the North Hall, and that's how big it was going to be. And a lot of these companies canceled, and you saw it, like the floor space. It was kind of uncomfortable. And LG just packed it in, really, where they decided to cancel late. LG is the one, if you guys saw my videos, where you go in, you walk in, and they have pretty much like over 100 TVs connected and curved TVs, and you walk in, and it's just amazing. It has surround sound, and all the TVs are connected together, and they have all these designs and planets and space and stuff like that, and I tape it every year. It's the first thing. It's the first experience you get when you walk into, you know, that North Hall, which is really, really cool. They didn't have it this year. They canceled. So what they did is they went to Home Depot and got all this lumber and put out, I mean, man, I don't even know how to describe how big this area was. And then they had this VR thing where it would show off its products if, you know, you scan the code, the barcode. And the only problem is it wasn't compatible with Safari or iPhones. But the space was massive. When you walk in, all you see is, you know, just wood, a wood floor, huge. And then you have like these little stations where you would, you know, scan the barcode and it's supposed to come up with the product and you see it kind of like in a virtual reality thing, but it doesn't work with the iPhone. And what a waste. Disappointing. The crowds were down tremendously. Tremendously. You just have to wait for the tram, which I take all the time. I stay at the Flamingo Hotel only because it has access to the tram. And when I bring, you know, our video guy there and has a ton of equipment, it's 5 minutes there, 5 minutes back, which is awesome because I've stayed outside of that, taking buses, which could be 2 hours each way. Usually it's a lot quicker there than it is coming home because everyone's leaving at the same time. But the tram usually has a line on it, though, and, you know, it goes pretty quickly, but there's a lot of people there. Lines everywhere to sample the newest, the best technologies and products. There were hardly any lines, other than two. The COVID testing line was really big, right? The COVID testing line. And look, there's people there internationally, and you're going to have to get a COVID test 3 days before you hop on a flight, right? So that's normal. I'm going away to the Bahamas next week on business, and same thing. To fill out like a special visa, passport, fill in all the data, and get a test taken before I leave. And a test there taken before I come home. So I get that. But the other line was to spin a wheel where you automatically get a free vibrator or sex toy from a company called Satisfyer. By far the longest line. By far. Longest line. And I thought it was cool because there was a couple who was probably in their 70s that spun the wheel and she's walking away with one of these things. And it was just, I thought that was absolutely cool. Some people might say, well, that's not too cool. That's not. To me, I thought that was fantastic. But that was the biggest line. Everything else, it was kind of like you had access to. And that was a disappointment. That was a disappointment to see a lot of companies, a lot of major companies really cancel and cancel that late. And the disappointment isn't from canceling and, hey, I understand the safety concerns and whatever, and even, you know, traveling international, but you did it so late, and the CES had to put this show on because the hotels would have been crushed. And that's one of the things, really quick before I get into some of these products. I mean, the hotels were kind of empty. I have no idea how these guys are going to make money over the next 6 months. I mean, wearing masks, people just don't like wearing masks, and going to Vegas, you have to wear masks almost the entire time indoors. It's definitely resulted in fewer people going. It's definitely resulting in, I mean, the casinos weren't crowded at all. You're seeing at least 60, maybe 65% of the people who are supposed to be there are not there. We're talking, you know, probably close to 200,000 people go. I would say there was about 60,000. Sounds like a lot, but man, that's a lot of lost business. A lot of lost business for Vegas. So if you want to win, Las Vegas Sands, a lot of these stocks are getting nailed. A lot of people are not going to Vegas right now. They're just not. You don't have that experience and freedom and go crazy. And you know, a lot of people are angry there as well. A lot of people. I mean, I got dropped off at Mandalay Hotel, and that was where, for a media day, and that was the Tuesday that I went. And Qualcomm had Qualcomm, Sony, Samsung, 3 companies that were there in attendance, where you know they weren't virtual. That started at 11 o'clock. That was one of the early shows. And I got dropped off at the wrong area. So I thought 2 guys came out of it was a big black SUV, with tinted windows on it. And they had their badges on. You have to wear a badge. And I asked them, I said, hey, you know what? Do you know where the conference is? Do you know where they do? Because I thought it was in the main conference area, and it wasn't. And he's like, well, you might have to go around here. I said, where? Around there. In the back seat, there was a lady. So obviously these guys didn't come out of that car. I thought they did. And the lady's like, he said he didn't know. Leave him alone. I was like, I'm asking a guy like one question. But I turned and walked away. I looked at the guy and said, hey, I really appreciate it. And I'm sorry that you're driving around a Karen all day. But, just people were a little angry too. I ran into a lot of that, especially with masks and stuff. And just, I don't know, it's just a different environment. It's supposed to be fun and free, and it wasn't. It definitely wasn't. You didn't feel that great vibe. You did. CES was a little bit better, but just outside the CES, I didn't really feel that vibe. With that said, doesn't mean there wasn't great products on display and great ideas to share. I mean, starting with BMW, if you haven't seen it, you can look at our video on our site, Curzio Research. It's a color-changing car. So they use electronic ink technology, and it's the same tech used for the Kindle e-reader, but you could change your car to any color using your app. And this is a concept, but the fact that they were doing it there, it's kind of like, hard paper product, like, it wasn't something that I think is the most durable thing right now, but just showing how they could do this. And it's going from black to white. The rims are changing colors, but, you could have, it's a hot day, you change your car to white. If you wake up in the morning, your car could greet you with whatever color you want, some nice bright color. It was fantastic. It was definitely one of the biggest products, created the most buzz for BMW. 70%. So they have the statistics on social media sharing and tracking products. And I always go there because, one, you can see what everyone's talking about. It's such a big place. Usually the top product is like 35%, probably 30%, 25% maybe, from past years. BMW is at 70%. 70% of the social media shares, everything going out, was people showing the BMW cars and their booth, which was incredible. Because it just wasn't that color-changing car. It was their new EV lineup. I test drove the iX, which is the first fully EV crossover, over 500 horsepower. It was absolutely insane. And if you're watching this on YouTube, I will bring this up for you right now. I mean, this car was unbelievable. 500 horsepower, 0 to 60 in 4 seconds, 325 miles charged, starts out at 83,000, probably be over $100,000 car. But wow, this was, it just, I mean, it was incredible. It was incredible. Just gunning this thing, and I did. It went from 0 to 70. It felt like it was even faster than that. The ride, the display, and the test drive was long. It's like 3-4 miles, I guess. They're like, hey, just keep making it right. And, I got lost a little bit, which is pretty funny. Because I didn't think it was that big. I thought it was like, hey, you lap around a track or just around a block. It was probably a good 2-3 miles where you could drive it and places that you can gun it. And, man, we got all that on video. And they just killed it. BMW really killed it. Another company that killed was Hyundai, which was not just about cars. You have to realize that cars, guys, it's not, these aren't just car companies anymore and hardware companies. I mean, the software, the technology, they were displaying their robotics. They bought Boston Dynamics division, which was owned by Google through 2017, then sold to SoftBank, and SoftBank sold to Hyundai. But those are the ones with the dogs. It looks like these robotic dogs that are pretty crazy. Holy shit, they had that and incorporated the Metaverse. Hyundai talking about the Metaverse. Healthcare companies talking about the Metaverse. But they had these dogs where they were dancing. Holy shit, you got to see the technology. It's unbelievable. We got a lot of this on tape, but the focus on the Metaverse was a huge surprise. Yes, we knew that would be a big theme from technology companies, not from healthcare companies, not from car companies. That was incredible. But you saw the Metaverse, Microsoft, big theme. Qualcomm talked about it. FinTech. The Metaverse, I wouldn't say it's here yet. And it's not here because you can't really explain what the Metaverse is. Try explaining what the Metaverse is. You can't really explain it. This virtual world, we're all going to live it. Yeah, but what do you mean? Virtual how? Like people still can't grasp it because it's such a big concept to really condense it into, hey, the elevator pitch. It's not easy. And a lot of companies, I think, are seeing how big this industry is, how Microsoft's going all in. Apple's going to go all in pretty soon. Probably going to have their own AR, their technology, glasses, VR, all this stuff. Meta, the major technology companies are getting into this. And man, look at their balance sheets. Tens of billions of dollars, hundreds of billions of dollars. If you're looking at Apple, Google, these companies, you can see why it's such a big theme. But, they're starting to get into it. And Metaverse is not necessarily AR and VR. So AR and VR is, gaming. However, a lot of companies incorporated the virtual reality into their presentations, like Sleep Number. Sleep Number had a great presentation. You put the headset on and you lay down in the bed, and the headset, has speakers and takes you through the whole process and lowers the number. And as it's saying, hey, we're going to, we lower the number based on your edit, lowered the number. It was like, in sync with the VR, but it made the presentation a million times better. It wasn't some guy when you're laying down talking to you and say, hey, press this, go to number 27. See, it wasn't like that. It was seamless. It was a really cool presentation. I actually told the guy, I said, this is a great idea. He's like, I know. He's like, this is really cool. He's like, put on the headset. There you go. You lay down in the bed and it just takes you to the presentation and it's doing everything totally in sync with it. But a lot of companies were using that to present their products. Eureka Park, it's a startup section. This is by far the most crowded. So several companies I may bring to Curzio One members to invest in alongside me. One in particular was incredibly exciting. Big investors already involved. The product just made sense. But when it comes to products and services, I have to say this. There's innovation on the crypto level. There's some crypto companies there, nothing too crazy. There's innovation, like I say, with Metaverse. Again, new technologies coming out, but there's nothing there that I felt that's going to make our lives better. It wasn't like an Amazon there. It wasn't like an iPhone there. It wasn't like that kind of technology where something's like, holy shit, it's going to make your life better. And when you do, you make life better or you make a product cheaper or, it's a necessity. That's how you disrupt markets. I'm not saying Metaverse is not going to disrupt markets. I'm not saying that EVs aren't going to disrupt markets. I'm saying that, they're not, it's not like a necessity. I don't have to go out and buy an EV right now. I don't have to get into the Metaverse. I don't have to. You kind of want to or have to really, shop at Amazon or one of these places where, you're getting your products, you're getting delivered and they're cheaper. It's just things that make your life better. That was a little bit of a disappointment. And you still have 5G. Everyone's talking AI. I hate when these startups talk AI because AI is just, listen, it's for AI, you need data. You need data analytics. And what it does is it analyzes data and shoots out outcomes and predictability. This is what's going to happen based on this. And it gets more accurate the more data is fed. So when you have a startup and you have no data, AI is useless. It's useless unless you're buying data from other places or whatever. But yeah, AI was a very big buzzword that everyone seemed to use. And to me, it's a turnoff when a startup says AI. Because you're not really using AI, you're using it as a buzzword. It's kind of like the mining industry. When cobalt is hot, they change their name to just Cobalt 1 or, uranium, whatever. Whatever's hot, you just change the name of it. And it's a little frustrating. But, AI was a big theme for a lot of companies, but for startups, not too crazy. But the startup section was really cool. Had lots of robotics, VR presentations, really, really cool stuff. I did have the media badge, as I told you guys, so I had a first look at Sony's presentation. It was great. There's a lot of people there. I was able to walk right in. I sat right in the third row, and to my surprise, who walked out right in front of me? Tom Holland. Tom Holland. If anyone over 65, that's Spider-Man. So Spider-Man, which I think it's up past 1.5 billion, third all time. He was talking about his new Uncharted movie that's coming out with Mark Wahlberg, and that was great. And then Sony also, after he came off stage, I was surprised, like, holy shit, Tom Holland's right here. It's awesome. And they showed a trailer, which was really cool. And I have a lot of this stuff that I filmed through TikTok. But Sony also announced its new Sony mobility division and brought out Sony cars called Vision, which was awesome. They didn't say that they're definitely selling the cars. I think it's a terrible idea for Sony. I think it's amazing with their technology and their software and everything else, but you're competing with a lot of majors, and it is hard to launch brand new cars or a brand new car company. We saw that. I mean, Tesla broke through, JetBlue broke through with airlines. Hardly ever happens. A new airline, a new car company, hardly ever happens. It's not their specialty. I think, license their technology and still has some of the best TV screens and things like that makes sense for them. But the cars are pretty cool. And, going all in on mobility, again, a lot of this stuff is concept, which means this is what we're capable of doing over the next few years. Samsung's presentation, the first 35 minutes of the presentation, CEO came out, and I almost left. It was horrible. It was about being more energy efficient. It was about going green, and these chips are going to, save energy. It's the most boring thing ever. The most boring thing ever. And when it came to a lot of these companies talking about ESG, look, it's a consumer electronics show. I understand the landscape. I understand this is being forced on you, whether you believe it or not as a company. You have to put in your presentations. You have to talk about it all the time. You want to make it a point to talk about it as much as you can. This is the CES. This is where you display cool products that everyone gets to take pictures of, that everybody can take videos. You could send them everywhere, like BMW and again, there's other products I'm going to mention in a minute, but talking about green energy is the biggest buzzkill because it's not exciting. You don't go home and say, holy shit, guys, you got to see this new energy efficient chip that Samsung had or NVIDIA had that's going to save energy and say that. Nobody says that. Okay, yeah, it's something, it's kind of like hygiene, right? I mean, you don't say, oh, I brushed my teeth. It was so great. I brushed my teeth. We know you got to brush your teeth, right? We understand the landscape, but at the CES, it's about creating buzz. You're paying over $1 million for your booth, a lot of these companies, because it's just state-of-the-art technology, displays, the people that you take there, shipping the products. I mean, these massive, massive booths. And some of them just really 100% focused on alternative energy. And that would, to me, it was just energy efficiency and ESG. I'm like, come on, guys. And it was like the same story over and over again. But that was the first 35 minutes of Samsung. Okay, this is when I had the media presentation, when I was able to get into this with the media. And however, after that, Samsung killed it. They introduced probably the best product of the whole show called a Freestyle. It's the size of, I don't know how to describe it, like a thick thermos, I guess, type thing, like the size of it. But it can project a screen almost anywhere, up to 100 inches wide. And it's a great screen, just from your phone, just from an app. It can be used as a lamp, so it could screw into the lamp, and it'll project like a small screen on your desk of anything you're watching on the phone. You could use it as a light fixture, where you have like 2 or 3 of them above an island, and they could project anything you want on the island, change the color, have different things walking around. It's incredible when you see it. Again, lots of videos and stuff. All that's for free through Curzio Research and YouTube and stuff, where we post a lot of this in real time. It also is a camera. It also has Wi-Fi capabilities and Bluetooth capabilities. It has a speaker with 360-degree sound, which is amazing quality, but the product was awesome. I mean, sampling that day, it was incredible. Qualcomm also killed it. Talking about new end markets for its Snapdragon chips. That company's been doing very well lately. Also highlight that chips are going to be used for the Metaverse. Another company talking about the Metaverse, which you wouldn't think so. Along with, NVIDIA, AMD. But a lot of these companies, Metaverse was a big theme. It wasn't just from, Facebook, which is now Meta, or, Microsoft. It was a pretty big theme throughout the show for a lot of companies. Where else do we see? Holy cow, there's just so much stuff. And his products, the biggest trend I thought, Metaverse, AR, big themes, but one of the trends that excited me the most in terms of making money off of was smart homes. This has been a theme for a while, I understand, but like smart home, think about DVD players like Blu-ray and DVD and how to pick a technology. With smart homes, it's such a fragmented industry, and a lot of this stuff doesn't work with other things. For example, Samsung has the worst appliances in the world. Don't buy them, I know from first experience. However, maybe you have the Samsung phone that you're using, or you're using their software, Philips lights, you're using Ring doorbell, you're using just all these different things, Vivian, just cameras. All this technology, a lot of it would not work with each other. They were not in sync with each other. They wouldn't talk to each other. And that results in you have to buy all the products whether it's, cameras and bells and lighting and appliances from, maybe 1-2 companies, and maybe you could go through Alexa. Now, there's an alliance that's been created, and it's called the Connectivity Standards Alliance. It's a very big deal. Amazon, Apple, Google, Samsung, all the major players, every single one of them, are all members of this now. And what it does allows for one operating system, and it looks like it's going to be a company called Matter. It's not publicly traded, I already looked, but Matter, M-A-T-T-E-R. Just go on the website, Matter, CES, and you'll see it's amazing. But that technology is going to allow all the devices for these companies to work together. So one operating system where you could just use any products you want, have a Ring doorbell, smart lights from Philips, blinds from IKEA, appliances from GE, that's going to work with Amazon's Alexa, Google Home, or through your Samsung or Apple phone. This is going to accelerate this trend. All these new homes that are going to be built are going to have smart capabilities going forward. It was a pain in the ass for the past few years. You had a lot of cool products that people have, including the Ring doorbell and stuff like that, but some of it's not compatible with other technology. Now everything's going to be in sync, talking to each other, all through Alexa, Google Home, whatever you're using, or the technology through your app, which a lot of companies have. But it's a really big deal. It's going to accelerate this trend. There's lots of pure plays in this industry where growth is going to accelerate in the years ahead. And based on this alliance, which basically every major company in this industry is a part of, you're going to see a lot of consolidation. You're going to see a lot of companies get taken over in this industry. And that's going to be cool because it's highly fragmented. There's a lot of different companies all over the place. It's highly fragmented. But now that all this stuff is going to be working under one system, one technology, and being able to communicate with each other, where you could buy almost any single thing, and it'll be compatible with whatever else you buy through a smart home, that's a huge deal. That makes it easier for the consumer. That makes the learning curve easier. Doesn't say, well, you need this. Oh, you need this app. Oh, but you also need this app to work on top of it. But Alexa will work with this. But yeah, it's only going to work if you have this app open. None of that shit. It's, hey, here it is. Ask Alexa, and there you go. You got it. Close the blinds, turn the lights on, hook it up to the Ring doorbell, whatever you want. But all that stuff's going to work together, which I thought was a very, very big deal. So I'm looking at names within that space. Some of them were expensive a year ago. They're a lot cheaper now. But for the smart home and even smart cities where this technology, again, and it's easy to communicate with each other, these are two trends that are going to be accelerated. To me, that was a surprise. That was a big theme 4 years ago, 3 years ago. You saw a couple companies break out, Vivian and Alarm.com, look at Ring. And holy cow, some companies did break out, and you saw tons of sales for these products, but now you're really going to see this trend explode. And there's a lot of companies, a lot of money being made in this sector. So overall, great time at the CES. Again, it included visiting so many startups at Eureka Park. Going to be opening up maybe one of those companies that's looking for funding. Every company there is looking for funding to Curzio One members. Also, I'm thinking of having my own booth there next year to talk about security tokens as a funding idea for these guys because, the venture capitalists, not the easiest thing. They're going to want to take a lot and own a lot. A lot of times you say, well, they're going to give us $5 million. A lot comes along with that price tag. Venture capitalists are there for the short term. They're not there for your long-term vision. They want to make sure they're going to get their money back right away. So a lot of people say yes to the money, but get pissed off afterwards. That's what I've learned over the last 20 years of being involved in a lot of these companies. But security tokens, man, what a way to fund a lot of these companies and getting an equity stake. That's cool. But overall, really enjoyed the CES. Got to sample a lot of technologies. If you want to learn more, and say this a lot, go to our Curzio research website. Again, that team put together a great timeline of all my videos, very easy to watch, including interviews and me sampling technology. But, it's entertaining. You see a lot of cool things, including me test drive the BMW iX crossover. And holy cow, that car is fast. Holy cow. I mean, I gunned it a couple of times. You'll see it in the video. The video, snap. Garrett snaps back in the back seat. Who's taping it. It was just really cool. It's amazing just to display. You see the cars at night. It was really, really cool. But also, I'm going to be coming out with a full recap for you. I'm going to highlight the top 7 companies that killed it at CES and which names may make their way into my portfolio. So kind of a watch list. Details going to be available to you guys, and I'm going to provide that for free early next week. I'm just writing it up. So you guys could see some of the research I do. We'll also include some of the videos in there and things like that. But yeah, I want to offer that for free, and you could see some of the technology. Plus, what we're seeing right now in the markets where technology is getting killed, a lot of these ideas you're going to be able to buy at 30%, 40% cheaper than what their highs were probably 3-4 months ago. Because a lot of technology companies are getting crushed. Even some of the majors are down 5% plus. The NASDAQ as a whole is down 7% already. Technology sector is down 7%. But it's rough out there. It's going to continue to be rough during this environment. However, you could find a lot of hidden gems, some of the ones that I'm going to be writing about, and that report's going to be available for free to you if you want it. It's going to be available on a website early next week. Don't worry. I'll let you know exactly how to get it. Probably like a banner or something like that. Something simple on Curzio Research website. So if you're a CRA member, Curzio Research Advisory, check your email on Wednesday. I'm going to have a cool pick for you from the CES, along with a breakdown of the markets, how we'll make money during this rising interest rate environment, and also portfolio review of every single stock, because I know it's been volatile, and I'm there for you 100% of the time, whether it's good, whether it's bad. Some stocks have held up pretty well in that portfolio, and others have gotten hit along with some of the rest of the market. So I'm going to give you a profile, just details, analysis on every one of those stocks, which ones we want to continue to hold, which ones we're adding to, and maybe which ones we might want to sell, as the environment has clearly changed over the past couple of months. Again, it's going to come out Wednesday afternoon. So guys, that's it for me. Questions or comments, I'm here for you. FrankCurzioResearch.com. Going away on business next week as well. It's going to be a lot of fun. Again, lots of ideas. We'll be presenting a lot of these ideas for you in the first couple of months of the year. So very exciting for all of you who are subscribers. Appreciate all the support. I'll see you guys tomorrow. Take care.